Oh, you're going to love this. Check futures. Dow's up 800, Nasdaq's up 470. Michael Lee is here. All right, Michael. Is this the start of a new bull run?
You know, Stuart, it may be. I don't think it is, though. I think there's a lot of economic pain that's coming that I don't necessarily believe is priced into the market. You know, markets may defy all reasonability and hang in there. But I think we've got some rocky waters ahead.
You see a recession coming early next year?
Yeah, you know, the bond market's priced in about a 44% probability. I think that should be near 100. When you have leading economic indicators like housing and manufacturing collapse the way they have, the Chicago PMI, I think we're going back a week and a half ago, but it's coming in at COVID low numbers. These are typically lead the overall economy. That's why they are the leading economic indicators, where employment, which is what the Fed is looking at, and a lot of people point to as economic strength, is a lagging economic indicator. And one of the, go ahead.
I'm sorry, I just picked up on your use of the word collapse. You say that housing and manufacturing are collapsing. That seems awfully strong.
Yeah, well, look, if you look at the home builder sentiment, we went from the mid-80s to the mid-30s in the course of 11 months in this year. The last time we saw something like that was 2008. Obviously, there was a lot more leverage behind the system. And so what I think of this recession is a 2001 type recession minus the 9/11, which really took us much deeper into a recession. But look, the slowing is there. It's intentional from the Fed and some policy mishaps from this administration in terms of energy. But I'd say it's unavoidable, particularly because we have not seen most of what the Fed has done in the underlying economy.
Okay, last one. Is there any group of stocks that you would buy today?
Yeah, look, I would be buying consumer staples, utilities, healthcare. I'd expect those stocks to underperform on a rip-roaring rally today. I would be lightening up on tech and financials and your cyclicals. I'd be taking some money and I'd be putting it into the defensive today. So XLP, XLU, XLV, and then also TLT, which is the 30-year treasury. It's the long bond. I think it's had a horrible year this year. I think it's going to have a spectacular year next year.
Okay. You used to be the Super Bowl. Obviously, you're no longer the Super Bowl, but you're welcome on the show. Mike Lee, thanks for being here. See you again real soon. Thank you, man.